All right, great. Well, listen, thank you all for coming back following the break. It was a terrific start to the morning, and Jim, thank you so much for getting us through that first panel from the perspective of where the investment community takes this business. We are now privileged to be joined by some of what I consider, and with all due modesty, the best practitioners of not just sort of good governance or environmental practices or sort of concern for their seafarers, but really just shipping in its largest guise in the world. And I thank each one of you for taking the time to join us. And Jim, with that, I'll just say one last thing to the audience out there. Again, remember, we'll have a question and answer open to the audience at the conclusion. Just type your questions in there, and we will feed them into the practitioners that we're about to hear from. Gentlemen, thank you all very much. Jim, over to you, sir.
Good morning, and thank you for joining us. I wish we were sharing a stage, but it is my pleasure to share my screen with the leaders of the shipping industry as it relates to efforts in ESG. I don't know, Hugo, welcome. So Hugo from Euronav, Ted from Ardmore, Kenneth from TK, Anthony Anthony from Ardmore, and Gary from Eagle. You are the driving forces in your companies that have made you best in class when it comes to your approaches to ESG. Looking forward to hearing your opinions, and I'm going to give each of you 5 minutes to start to tell your company's ESG story, starting with Hugo.
Well, thank you very much, Jim. I hope that everyone can hear me loud and clear. I would say that at Euronav, ESG is in our DNA. You know, the company was created back in '95, and the founders created the company for the very purpose of improving the industry batch standard of transporting crude oil. At that time, the newspaper was still filled with the oil spills and all the rest of it. So over 25 years, we've practiced ESG without even calling it ESG. There's a very good summary of what we do in our annual report. We have dedicated a significant section of it this year, and it's not the first time. I would say that ESG is a good word, but we prefer at Euronav sustainability and economic sustainability, because whatever you do on the E, on the S, or the G, after all, it needs to be economically sustainable if you want to survive and if you want to take it forward and influence the industry and the others. So the second point that I want to make is that ESG is not only about the E, and I'm under the impression that very often people focus only on the E, but at Euronav we do believe that the S and the G are very important. We've been part of the Bloomberg Gender Equality Index for the last 3 years. That's only a token of how we have social policies implemented at Euronav. We are a vertically integrated company because we do believe that the people at sea are part of the company and have the same values as we share with them. And I think that was very well demonstrated in the current crisis, which is the COVID crisis, about what do we do on crew rotation and these things, and we've been very vocal about it. On the G, I would say that good governance is good business. Your reputation is paramount. We are always trying to avoid conflict of interest. We have a fully independent board. We have been ranked in the Weber Index top quartile since the inception of that index. Our board is composed of 50% women, 50% men. So that's also a good link with the S. And we have disclosed our carbon footprint since 2017, so way before it was mandatory. Now, when it comes to the E, because it is very important as well, the tagline of Euronav is "The ocean is our environment," and we have chosen that tagline in 2005. That is 15 years ago. So as I said, it's very much part of our DNA. I think that I've done that in many other panels, and I will continue to do that for the rest of my life, shipping is super environmental friendly. It is the best way to transport any goods on this planet. This has to be reassessed. And guess what? We can do better, and we will do better. And I think that all of us in this panel and many others outside this panel are convinced that we can do better. In order to be better, what do is we try to cooperate with the other people, because we don't believe that alone we can get as far as we can go collectively. So we have been cooperating on the Poseidon principles last year. We are also helping drafting the Sea Cargo Charter, which are going to be launched this year. We are part of the Getting to Zero coalition, and that's only to name a few. So we take ESG very seriously. It is about sustainability. It is about long-term sustainability, and we do that with a great pleasure. Thank you.
Thank you. Ted Young, can you tell us about Dorian's ESG story?
Thanks, Jim. I think, like Hugo said, we have always seen ESG as an integral prong of our overall corporate strategy. Obviously, to generate returns to shareholders, but this is a key portion of how we do what we do. The need for rapid decarbonization clearly introduces a different dimension, however, to ESG. Again, it is core for us. An ESG strategy is doing right for our key stakeholders, customers, employees, end users, and the environment, while being responsible stewards of and generators of returns on our shareholders' capital. We're fortunate that our business, our freight, and our worldview align very well with this vision. We're proud to ship a product that's been instrumental in improving the quality of life for millions of people across the world by providing an environmentally friendly, low-cost source of cooking and heating fuel for many who've had to rely on biomass or other high emissions and frankly dangerous fossil fuels for their most basic needs. As a product, LPG truly supports our environmental and sustainability raison d'etre. In addition, we provide well-paying jobs for our seafarers who are able to remit their salaries back to their home countries to support their families and, by extension, local businesses and industries. Why are we able to achieve those goals and generate profits for our shareholders at the same time? I think it's in large part due to a diverse and engaged board of directors, dare I say, an engaged management team, because we all understand that these goals are part of a symbiotic relationship among the various forces of profit and return, environmental responsibility, sustainability, and of course, good governance. I would be remiss in respect of the E if I did not point out that LPG is among the leading contenders to be the alternative fuel that can enable the global fleet to reach the IMO target carbon reduction levels by 2030 or indeed by 2050. By way of comparison to traditional diesel, LPG would reduce SOx emissions by up to 97%, particulate matter by 90%, and CO2 by 20%. Clearly, additional work needs to be done, but we believe that continued advances in technology in the realms of speed and consumption optimization, routing technologies, remote surveys, not to mention in our sector, the advent of bio-LPG, positions our cargo extremely well among today's slate of possible successors to diesel. Similarly, looking back at our history, the E in ESG has been at the core of Dorian since the 70s. We've long maintained that providing high-quality vessels maintained to a first-class standard by a highly skilled and fairly compensated crew will ensure that we can meet our charterers' need for safety and timely delivery of product around the globe. In fact, ESG informs our long-standing mission statement to supply safe, reliable, and trouble-free transportation to our charterers. We're also members of the World Maritime Forum, signatories to Getting to Zero. Again, it's very much part of what we do and part of our mantra of what we tell our seafarers, our shoreside staff, and everybody. Look, as we sit here today, global shipping industry finds itself at a critical juncture in its history. The world is looking to us to supply the world's growing population. That's going to require more voyages, probably more ships, and at the same time, the world is looking to us to radically reduce emissions. As many of us are aware, the study by UMass and ETC this year estimated a total cost of up to $1.4 trillion to have shipping's emissions over the next 20 to 30 years. That price tag, which is the equivalent of 50 to 60 billion, that's with a B, per year, is a staggering sum particularly when you consider that the combined market cap of all the major listed wet, dry, and container shipping companies is something on the order of $20 billion. Clearly, our industry is going to have significant financing needs over the coming decades. In order to meet those ambitious and frankly vitally important decarbonization goals, we believe that equity and debt investors' requirements for responsible ESG policies will dictate access to capital. And as we in the shipping business know all too well, access to capital is critical to long-term success. We believe that our strong ESG focus, our modern fleet, and our competitive cost structure that balances economies of scale with high-quality operations will enable us to have access to that well-priced long-term capital. As they say in the American South, we do eat our own cooking here. We did conclude a loan facility in April this year, which among other things allows our company to enjoy interest rate reductions for exceeding the AER trajectory values as promulgated by the IMO. We're not alone in that, and we applaud others who've embraced this trend by doing similar loan or capital markets transactions. We'd say that those companies that fail to recognize the importance of an ESG strategy will be left with higher priced and less readily available sources of capital, and potentially without the scale necessary to thrive in the coming years. So put simply, those who evolve and have these critical building blocks in place, along with first-class assets and operations, and we certainly count ourselves in that group, with the industry leaders in the preferred shipping industry investment vehicles for the future. Thanks.
Thank you. And Kenneth, will you tell us the TK story?
Certainly, thanks, Jim. So I thought I would just really introduce TK here. We've been around since 1973, and our business is to transport energy. When we look out into the future, we think that with growing population, growing middle class, growing economies, the demand for energy will continue to go up. We also recognize that the global energy mix is going to change. So in the future, the energy that we're going to transport is most likely going to change. And the way we use fuel and the fuel we use to propel our ships will probably also change. But the most important question to us when it comes to ESG is really about how we allocate capital in a business where we are all making investment decisions which last for 20 to 30 years. And when we look at it, I think Hugo is right. Shipping is very efficient. We transport 90% is 3% of the global emissions pie. And that obviously guides us. How can we do better on the 3%? But we think that the bigger question is really how can we as a shipping industry help attack the other 97%, which is really all about the fuel mix. So I wanted to talk about three things that we're doing at TK and how we think about it. The first one is really around capital allocation. And if you look at where TK came from, we used to be a tanker company transporting crude oil. 15 years ago, we went into LNG. We saw that as a growing importance in the global energy mix. We've invested over $6 billion in LNG ships, and we continue to see, even in any of the scenarios, that LNG will continue to make up a big part of the global energy mix. So that's a business we'll continue to invest in. Today, we've made that transformation, if you will, or big change of the company. So 70% of our invested capital is now in the LNG space, reflecting a changing global energy mix, and that will of course continue to change. The second part of it is really what we are all focusing on as companies in how we run our businesses more efficiently, leaving a smaller footprint in the business that we conduct. And again, I think if we look at what has happened in the LNG space, I think that's a great example of where we've driven efficiencies. We've seen that in the container line space, where the emission per unit transported, in our case cubic meters, have improved dramatically. So if we compare the ships that we ordered when we started out in LNG 15 years ago and the ones that we've taken delivery of this year, there is a 50% improvement in efficiency. So that's obviously been working very diligently on just driving efficiency, is something that we need to do all as companies going forward in whatever asset class that we're in. And in addition to that, we obviously doing, I don't think there's any silver bullet from TK here in terms of what we're doing, but looking at digitization, voyage planning, optimizing, so that we're using and leaving as a small footprint as possible. And the last part that we, and the third leg to how we look at ESG is really our governance, our culture, our infrastructure. And what over the past 10 years, every year we've been issuing a sustainability report. We think that's good, but we also recognize that investors and the world wants to see more. So earlier this year, we engaged the NVGL to go through everything that we do. The outcome was that we're going to have a reformed sustainability report leaning on GRI and SASB reporting transparency going forward, where we'll disclose even more. Later this week, we are also announcing that we are joining UN Global Compact as an initiative to set the bar even higher for ourselves, and I guess give us that slightly uncomfortable feeling that we all need to do better, and we're definitely taking that challenge. By the end of the day, I think all of the companies are really the ones that will do well are the ones that are founded on strong culture, strong governance, doing the right things. TK has always prided itself on being a transnational company. So diversity discussion for us is well, that's inherent to how we operate our company. Gender equality is of course the same for the 20 years I've been with the company. We always had female directors on our boards, but when we look at the headlines today, I mean, it still attract the headline if you hire a female director into a public board of a large shipping company. So clearly, as an industry, we have a lot more work to do, and we just need to get on with it.
Thank you. Anthony, I think it was a year ago this week, we were in Boston, and I heard you talk a little bit about your ESG efforts. Now I'm going to get to hear a little bit more about Ardmore's ESG efforts.
Well, thanks, Jim, and hi, everyone. So, first of all, there are many different approaches to ESG, and all the companies on this panel today have their own unique approach, and we do too. It's really a function of who we are as companies. You could say it's in a company's DNA, which I think Hugo mentioned earlier. In terms of what's now being termed ESG by the industry, it's really only a recent development, but in substance, our story goes back 10 years to the start of the company. From day one, we were very focused on efficiency improvements, which then results in carbon emissions reductions through technology and operations. We started off with Japanese ships, which at the time weren't hugely popular, but they were very fuel efficient. We modified them further. When eco-design ships came along, we were among the first to order. I remember our COO, Mark Cameron, many of you know Mark, taking the view in public presentations that eco meant two things, economical and ecological. And he acknowledged at the time that the focus was on the economics, but he was pretty adamant that he felt the ecological or the environmental part of it would come, and he was right. This has been a constant theme for us through the years. We're involved in many efficiency improvement projects today. Some of them are very forward-looking, such as a program run out of Denmark called Decarbon Ice. We're the first company to report carbon emissions quarterly, and we try to add another layer of detail and interpretation every quarter. As another example, it may not seem like a big thing, but we just bought a ship that, well, it's 10 years old. It has some efficiency features that we've not seen before, and we're evaluating whether they can be retrofitted on other of our ships or included in future designs. And we know that in an overall context, this seems like very small incremental steps, but overall we think we're reducing our carbon emissions already by as much as 10% through these initiatives. However, we know that we need to think much bigger, and we will. In terms of the S in ESG, we've always been focused on organizational performance through hiring and developing and retaining ambitious, capable people. And almost from the beginning, that resulted in our gender mix being roughly 50-50. In fact, today it's 55%. So as a consequence, as the Marine Corps recruiting slogan goes, we're always looking for a few good men. Regarding diversity in a broader sense, we're lucky in where we're located, but we also look out for people with different views. And as a consequence, out of 50 shore staff, we have 12 nationalities, which brings real benefits in terms of capabilities, experience, and different points of view. So on the G, that's really the easiest part for us. We've always taken governance seriously. This is part of the heritage we have from partnering with Greenbrier. But it's also, Kenneth, based on the very bad experience we had when I was at TK, first failing and then succeeding and taking the company public in 1995 with a revised corporate structure that addressed all the governance issues. In short, we don't like working under conflicts of interest, and I don't think investors like it either. So just shifting gears a bit and to kind of round off, I think we need to work on terminology. As I understand it, ESG is really a set of criteria against which investors and bankers measure our performance in these areas. I've not heard a better term yet, though, for what companies do to meet these criteria. Internally at Ardmore, we call it performance and progress. We think we're better off just focusing on how to blend performance and progress, in the sense that no company today can remain truly relevant unless they take this seriously. But at the same time, no company can afford to spend money on initiatives unless they're linked to performance improvement. Fuel efficiency is a good example. Organizational capability is another. So in summary then, our ESG story is about doing the right things for the right reasons. But when it comes to ESG in a more literal sense, we think of it as an investing and banking concept, how they judge us. And as such, it's a label on a box. It's a checklist telling people what's inside. It's up to us, all of us on the panel here, to make sure that there's actually something real inside the box. For Ardmore, the concept of performance and progress is integral to everything we do, and we believe it's well received by investors and bankers through their lens of ESG.
Thank you. And Gary, you've got the most difficult job of going last on this panel, but please give us your perspective. And your company's name came up in the last panel as Joachim from the governance group was speaking.
Great. Well, thank you, Jim, and hi, everyone. It won't surprise you. A lot of themes are similar, and it's a vitally important area for us. Having said that, I've been at Eagle now 5 years this month, and when I got to the company, it wasn't really an area of focus. And actually, the second hire for me was head of performance, because ultimately, as has been said here, improvement in performance is very much aligned in terms of emissions and efficiencies and things like that. So I always start with the G, because I think ultimately setting the stage, good governance, transparency, code of ethics, no conflicts of interest, independent boards, things like that, really enable a company to then make the right decisions. And without that, it becomes muddled. So I think governance is vitally important. We weren't in the top quartile of the Weber scorecard. Used to be Wells Fargo, but I'm proud to say we've actually been at the #1 spot in the last 3 years. And so that's an important aspect for us. And I think it's important to say it's not about the spot, but the top quartile in that overall performance relative to the bottom is pretty demonstrable. And that goes across other industries as well. Good governance translates to good business as well. And then moving backwards into the S, we have we've adopted 4 of the UN Global Compact sustainability goals, specifically. And one of them is the decent work aspect. And as Hugo mentioned, that's had a lot of focus recently, the humanitarian crisis regarding our seafarers and getting them off the vessels. And we've made a lot of progress recently, but of course that remains a challenge. But it's an area of focus for us. Partnerships, working together as an industry. It's been mentioned here that companies can't do this on their own. So ultimately, it's going to be across the industry, and Global Maritime Forum, which we're a part of, as well as getting to zero, is imperative as well. Looking back at the final, the environmental, we are all, of course, focused on 2050, and it's going to take zero emission vessels to get there. Ultimately, though, the segment that we're in, which is the mid-sized dry bulk segment, we will not end up being, first movers in terms of zero emission vessels, essentially because the fuel supply aspect. I mean, we literally have ships that will call a port and not go back there for 5 or more years even. And so it will start with vessels that are back at the same ports on a regular basis, ferry, cruise, liner, and then the larger ships that tend to call on a few ports. Having said that, we're fully supportive. We're active members, as I mentioned, of getting to zero, and we will be, on the forefront within our segment to do that. But it's also about doing things now. And as I mentioned, performance management is an important thing for us. Over the last 4 years, we've acquired 20 new vessels. That's 40% of our fleet, 0 to 4 years old, much more efficient. And we've sold 15 of our older, smaller, and less efficient vessels. And that's enabled us to reduce our emissions by 11% over the last 4 years. We've also spent considerable resources, both money and time, investing and testing, advanced hull coatings, both pre-swirl and post-propeller, appendages and ducts, trying to make vessels and making vessels more efficient. And finally, doing things with onboard meters, torque meters, flow meters, kilowatt hours, and using, big data or smart data, as we like to call it, along with more advanced weather routing. These are all things that we're doing today to have a lower environmental footprint. It's been said here, shipping is the most efficient way to move things, but we know we can do better, and it's a journey, and every day we come in the office and ask ourselves how we can do better. So, we're proud of the progress we've made over the last 5 years, but we still believe we're at the early part of this journey. And I'm proud to be up here with these peers of mine, because they represent really the collaboration across this industry that's going to get us to where we need to go.
Thank you. I'm going to change up the order a little bit, and I want to get your views on your vision of the future. And found this on my desk this morning. Shipping has changed a lot in the last 1,000 years. Are we heading back there again? But technology, consolidation within your industries, the comments we heard about the cost to get to the goals. Kenneth, since you're the only Nordic on the stage, why don't you take the question first in terms of what your vision for the future is for the industry, looking out 15, 20 years?
Yeah, thanks, Jim, for calling my Viking blood out here. Where we spend a lot of time is obviously trying to figure out how's the energy mix going to change in the future. And the EIA kind of have the 3 scenarios, which is current policies, stated policies, and then sustainable development. And when we look at the current policies, which is really us all doing what we've been doing up to now, the trajectory here is that everything will continue to grow, and all of the stuff that we're all involved in transporting will continue to grow in importance. The stated policies, it looks like almost like the COVID curve that we're just trying to flatten, but that's not going to get us there, and it's not going to get us to where the Paris Protocol wants us to get. So the only way to really get there is to bend the curve, and that's around the sustainable development. And I think it's very difficult to go to any board today and ask to invest $100 million or $1 billion, and saying that we actually don't know what world we're solving for with that 20 million or that 20-year investment that we're doing here. Because you may believe that stated policies is where we're going to end up, but what if we are in a scenario where instead of consuming 100 million barrels of oil, we're only going to consume 70 million barrels of oil, instead of having the current projection on coal, it's going to be a third of that. And that is really what I think is going to guide our investment decisions going forward. The only scenario that we have out of it where which looks fairly equal is actually around natural gas at the moment. So it's the one area that we at present feel that's probably where you can make a 20-30 year investment. Now, it doesn't mean that, of course, there will be oil, there will be coal being transported in 2040. But I think the pressure on the industry here is that we need to make significant changes to the vessel designs. And that's the biggest dilemma at the moment. I think Maersk is doing a great job in terms of really putting some money into those studies. But I can tell you, having looked at what it would take to order a tanker just burning LNG, which is the most abundant fuel that we have available to us as an alternative to the HFO that we're burning today. The case for doing that is still not obvious. So you can only imagine what it looks like when you start trying to make that investment case based on that you have an ammonia supply chain or whatever we all think is the better alternative to the HFO. So we have some big questions and big challenges that we need to figure out over the next 2 to 3 years, because until we do, I think it's going to be very difficult for people to allocate capital into this sector.
Thank you. Hugo, could you give us your views looking out?
Yeah, they're not very different than Kenneth, but obviously we are only present in one segment, and that segment is transporting crude oil. So the view that we are taking at Euronav is whether we have passed the peak, whether we are approaching the peak. We believe that the decline is going to be a gradual decline. And we are very fortunate in the shipping industry because our assets are wasting assets. In other way, every asset has a certain lifetime. It is around 20 years. And we are now in a global fleet age profile of on average 10 years, which means that we have as many ships that are more than 10 years as there are less than 10 years, which means that every year about 5% of the world fleet can be recycled, can be sent to the scrapyards, hopefully decent scrapyards, as was mentioned on the previous panel. And we believe that's a great way of dealing with the decline. So we're not trying to escape from that reality. We are embracing that reality, but we believe that we have two challenges out of this. We have the first challenge, which is indeed we need to improve the industry, and we are part of that industry. Whatever we carry, we need to improve our CO2 footprint, try to minimize it. And it's not only about CO2, by the way, it is about greenhouse gas. So that's the first challenge, and I think that it's very similar across all the shipping segments, and we are there to meet those challenges. The second one is that obviously we transport crude oil. And so as Kenneth said, well, that might not be the product that is the favorite product to fuel our ships or to fuel any part of the energy mix in the future. But that is, in our mind, not the real problem for Euronav, because we believe that in a declining market, the world fleet will adapt, we will be able to grow, we will be able to further consolidate, and quite frankly, and it's not to be pretentious, but we believe that we can do a better job if we are bigger, because then we can allocate more capital to what matters, and what matters is indeed to reduce our own industry footprint.
Thank you. Let's move sectors and look at dry bulk, Gary, and your vision looking at there.
Yeah, I mean, in some ways, there's some similarities if you look at the coal aspect, to crude or petroleum products, and right now coal is about 25% of the dry bulk makeup. No doubt in my mind that the fleet will adapt and right-size itself. As Hugo mentioned, our average scrapping is 25 years, so on a long-term basis, 4% of the fleet goes away a year. So the fleet will adapt. I think the big question, and I know this focuses on ESG, but comes back to the business, will it do it prospectively, or will we overbuild for a historic, demand segment, demand picture, and then find ourselves with too many ships? Unfortunately, I think history would show it's probably the latter, but we have the opportunity to right-size the fleet as we go forward, to not order ships that aren't needed as we see coal, reduce over the coming years. So, we're fortunate in the mid-size segment. We carry both major bulks and minor bulks, and so coal for us is about 15 to 20% of our cargo mix today, but we easily can see a world where it goes to zero, and we're able to work around that. So as we go forward, I think we'll see it clearly decline, but at the moment, it is an important cargo mix in terms of both energy production and steel production.
And Ted, why don't we switch to LPG for a moment and take the vision forward?
Yeah, I think as I touched on earlier, I think we feel pretty fortunate to be shipping a product that's certainly a bridge fuel, and we think is very promising for all the environmental reasons that I think most of us are aware of in the industry. I think that part of it sets up pretty well as part of our longer term vision. I think as we look out, we believe capital will be scarcer and harder to come by. And obviously, as the only CFO on this panel, that's something that occupies as much of my time as the rest of the guys, probably a bit more so since I'm responsible for finding it. And so I think, how are we going to get there? How are we going to meet this need to decarbonize and the capital investment required? Dorian's happy because, we do believe that LPG, dual fuel, and eventually probably solely fueled vessels will be the future in our industry, or could well be the future in our industry. We think we've got a pretty good investment proposition to put to investors in the capital markets. And we do think that being able to articulate that and have the data to back it up sets us up pretty well to be a leader. And we do think as we look forward, I suspect we will see a far more consolidated world of shipping, obviously among the listed names, but even among the private names. Scale is going to be important, not because it's going to allow you to really have pricing power, which I don't think exists in any segment of shipping, but I do think, as I said on this panel, it's going to allow you to allocate capital and get a much better return on investment as you look at ways to replicate technological advances across your fleet. So, we see that very important nexus between being a long-term player and thriver, as well as having the right fuel and the right products, cargo in your mix.
Thank you. And Anthony, again, it's always hardest to go last, but give us your views as you see them going forward.
I hope to do as well as Gary did last time. So look, I think there are three things that I'd like to add to the mix here in discussion. And the first is a bit of perspective on growth. Over the last 20 years, the world fleet has doubled in size, along with the global economy, right? It's probably going to continue doing that, maybe not double, but 20 years from now, we could be looking at a fleet that's 50 to 75% larger overall. Obviously some sectors will, fare better than others. And, that means that, first of all, we're not really in a declining business. Certain sectors may, there might be more opportunity in other sectors, right? But there are going to be a lot more ships. And I think that naturally leads to larger fleet sizes, not altogether to do with consolidation, but rather just global fleet growth, right? So if we look at our sector, MRs, if you go back 20 years ago, a large MR fleet would have been 15 or 20 ships. Today it's 50 to 70, right? That's, consolidation to a degree, but also just the growing, the fact that segment has increased by 2.5 times in size. The second thing is that, if you cut through everything, it seems to me that, we're waiting to be told what fuel we need to burn, okay? And we'll be burning a different fuel. It's probably going to be much more expensive than we're using today, and therefore fuel efficiency and optimal speed and these kind of things are going to change and be much more important. So an emphasis on fuel efficiency as well as adapting the right technology at the right time in terms of fuel, which could be very simple, by the way. If it's a biofuel, you can run it in the same engines we have today. So, fundamentally, I don't really see the industry changing dramatically in terms of the basic building blocks. But the third thing that I think is worth commenting on and admitting is that, when you look at the oil sector in particular, there's a lot of talk about peak oil demand when it's happening. BP thinks it's already happened. Others think it might be 5 years away, maybe 10. That doesn't necessarily mean that tanker demand tips over at the same time, because tanker demand tends to grow ahead of oil demand or at a more rapid rate. So peak demand for tankers could be much further out. And very sorry, Hugo, to say this, but I think crude will tip over first. Then probably products, Ted, big smile, maybe gas after that. But the real growth story long term is probably chemicals. And that's what I'll leave you with. So.
Thank you very much. We don't have a lot of time left, but I do want to tie this in a little bit to the capital markets. Green bonds, sustainable loans, sustainable bonds. I want to start with Kenneth, and then I'll just open it up because we probably won't have time to make it all the way around. But I know you can't talk about the TK shuttle tanker bond deal because you're no longer a stakeholder in TK shuttle tanker, but you can tell us what you learned in that process.
Yeah, I think it's it was a good process, but really it started with the original decision, right, which was the capital allocation again, and somebody leaning out and actually saying we're going to make this big decision, which is basically shifting the propulsion system to one where we can burn LNG on a shuttle tanker, which up to then had only been burning HFO. And I think it's one of those decision processes that's going to be in every boardroom as we go forward. How do you find your conviction that that is actually a good investment, and that your customers want to charter that vessel where you are making what is a relatively big change to the propulsion system. And again, you make it sustainable for 20 years, and you're pretty certain about the economics when you're trying to calculate what is going to be the cost of the future supply of LNG, etc. But all of that, I mean, it was technology that was available a long time. I mean, we discussed using LNG as a fuel for shuttle tankers 10 years ago. So it's not like it's a big breakthrough innovation as such, but the decision to go and do it, and that the stars are finally aligning, where you can actually do it with certain conviction and making that decision, putting that in front of your board. That's the big thing. And then everything followed from there, because then suddenly you have a story, you have a reason for investors to come in. And yes, shuttle tankers are still transporting oil, but now suddenly they're doing it much more efficiently than they used to. And suddenly we are meaningfully attacking the 3% carbon emission pie that is what this industry is focused on, right? So we gave investors, bondholders, whoever, a reason to invest, because we're really putting our capital in a way where we were demonstrating that we're prepared to transform the industry. And I think that's the kind of leadership that can be used as an example going forward, and for all of us as we make those decisions.
And I'll throw this question out to anyone who wants to take the first stab. Obviously, the capital markets have evolved in a way that's made cost of capital more difficult, access to capital more difficult. As you think about the future, how do you think about positioning yourself and utilizing the capital markets? Some of you are in segments where your cash flow and your earnings right now are substantial, and you may or may not have any current needs for the capital markets. But how do you think about the capital markets as we move into the future? And I'll throw it out to anyone.
I guess nobody else wants to. I'd say a couple things. Our own experience in doing a loan that was linked, I guess, to the Poseidon principles was interesting, because it was great to see our banks put their money where their mouth is. That's going to be absolutely a feature going forward. We, like probably everyone else, has had a number of discussions with various intermediaries, investment bankers about green bonds and the like. And I think most of them will admit that it's not going to get you any better pricing, but it's becoming an increasing sine qua non. In other words, you won't get capital unless you have an ESG story, in quotes. So I think that's something we're going to see. And I think the oldest rule in capital markets will continue to prevail. Raise money when you can, not when you need it. And so I think, aside from all the other stuff that we all try to do as executives of listed companies in terms of having filings and everything else up to speed, I think having that robust ESG information at your fingertips, ready to go and ready to communicate to the investment community when the windows open. And let's face it, shipping capital markets windows open far less frequently than other sectors. So again, continuing to refine and be at the forefront of ESG thinking is going to be really important for our industry, maybe far more important than for others.
Yeah, maybe I can go next, and I fully agree with you that we have a very similar approach when it comes to capital markets. I think that it's either a burden and you say, okay, I'm going to have to tick all those boxes on ESG before people can invest in my company, or you see that as an opportunity to differentiate yourself from some of our peers. And I think that I've mentioned that in many other panels. This industry does not enjoy a very good reputation. Whether it's deserved or not, I don't really care. That's a statement of fact. But what it creates is an opportunity for certainly all of us in this panel and maybe some others to differentiate further, to improve the industry reputation, but to attract the capital that very soon will be the only capital available there. Because it's not going to be a question of price, it's going to be a question of yay or nay. We were visited by the team, the ESG team of Norges Fund, Sovereign Wealth Fund of Norway, and they did really an audit. I mean, they spent an entire day in our office asking very detailed questions. And we were very proud to pass sort of that committee. But guess what? That committee didn't decide to invest in Euronav. That was the first step. Then the investment committee looked at Euronav and decided whether or not it was worth making an investment in Euronav or not. So it is a barrier to entry. And as many barriers of entry are concerned, they represent an opportunity for the good people. So there is all the motivation and all the good reasons in the world to go and embrace ESG and do even more than what we were doing before. It's
And Hugo, are you still there or are you frozen? Anyway, if he's frozen, that was a great message to leave it on unless someone wants to add anything else. Okay, there he is.
Oh, sorry if I froze. It wasn't on purpose. So I'm not like your daughter who doesn't know how to answer.
She does it very well. It's quite entertaining to watch. It was a pleasure to be here for 6 months with her before she went off to college. Anyway, Jonathan, I think we've exactly used up our time before Q&A, and maybe we dipped into general Q&A a little bit, but why don't I turn it over to you for the audience participation?
Absolutely. Thank you very much, Jim and the panelists. So we had a couple of questions come in, so we're going to try to keep ourselves on time. So the first one that I'm going to shoot off to the group would be, could you comment on EU emissions trading system and how similar initiatives would affect shipping and trade, especially for smaller companies with lower available capital and access to finance? Once again, this is a kind of like first in, first served kind of situation.
I think everyone's pretending to be frozen. Go ahead.
I'll jump in. I mean, I think when it comes to things like that, I mean, you said it in the question, right? And that is better capitalized companies have the ability to compete, you know, in a higher regulatory environment. You know, to me, the two most important things in any kind of regulatory, you know, new regulations are transparency and visibility. I'll bundle those as one, and then an equal application, you know, under the regulation. And I think if we look back at whether it's ballast water or IMO 2020, that lack of visibility really creates problems. And then ultimately, it comes down to ensuring, you know, enforcement. So if we get into things like credits and that, the important thing is that we know we have visibility on what it's going to look like, what are the requirements to do it, and then ensure that everybody plays by the same rules. And if that happens, then again, the larger companies, the better capitalized, are going to be the ones that can compete in that environment, which isn't necessarily a bad thing in my opinion.
Thanks for that answer, Gary. Does anybody else want to jump in, or should I move on to the next question? I'm going to take that as a move on.
We'll agree.
At the Marine Money Conference last year, there was a very compelling presentation called Oil is the New Tobacco. In this presentation, she showed that when an industry falls out of favor with investors, it sees a reduction in investment, which causes a reduction in capacity, which leads to an improvement in fundamentals and financial performance of existing assets. Do you agree that you will make a lot of money in the medium term? If so, how will you allocate that capital, give it back to investors or invest it in reducing carbon emissions? Kenneth, do you want to take a shot at that?
Well, I'll definitely open it up. I think others can lean in, but I think it's an interesting debate, right? Because if your markets are not growing, and of course we can have a lot of discussions. I agree that shipping will probably grow, as Tony is saying, but there are certain sectors that are likely not to grow, and I think it really is interesting because there maybe is an opportunity to make more money. And we spend a lot of time looking at what our customers are doing. And if you look at what the division between international oil companies and national oil companies, and the trend of not investing in replacing reserves, in many ways you could argue that that's similar. I think that's actually a better example of what shipping could be faced with, because in many ways the hold on not investing in new ships is not too dissimilar to what the international oil companies are doing in not investing in replacing reserves. So overall, as we're taking down the total capacity and allocating differently, we may not actually impact the profitability if we get it right. If you get the timing right, it's all about supply and demand. If you manage to make sure that we temper the supply of ships, which is inherently one of the things that shipping has not been great at doing over the years. But if we actually get that right, and as we've all said, we do operate depreciating assets, then there is definitely a case for making higher returns, even if our markets or our businesses are shrinking. So that's point number one. In terms of where people are going to allocate the capital, well, that's a great question, right? I know that some people will go out and give it back to their investors because they have more dividends that they can distribute. Others will allocate it back into new businesses that they want to get into, and hopefully people will spend it on what I talked about in the opening comments, how we can all help change the world to a lower carbon footprint, which is really about building better ships and making sure that we invest in the infrastructure that's required for transportation of more sustainable energy going forward.
Thank you, Kenneth. And sorry, Anthony, did you want to say something?
Yeah, no, I just want to add on to what Ken was saying just very briefly that, in reality, once the regulations are set and the future is known, there's probably going to be a massive need for capital investment in new vessels as older ships become obsolete and get scrapped earlier than expected.
All right. Well, I think that we'll probably wrap the Q&A session up with that. Jim, I'm going to hand it back to you while I bring to kind of close out this session.
Very good, thank you. First of all, I want to thank our panelists for joining us today. And I want to thank them for their contributions to the world and the examples that they've set. But we will wrap up with the other Jim.
Well, Jim, you just said exactly what I wanted to say to this group, and I'm deeply appreciative of their participating, appreciative of your stewardship over the last couple of hours. I would like to say, with my MTI hat on, I also appreciate, while we've been talking about the environment primarily, that each of you mentioned your people ashore, your people at sea, and people do always come first. So thank you for that. This brings to a close the first day of the Marine Money's Climate Week association with the UN in New York City. Tomorrow, I would remind everybody out there that would like to participate again that at 10 o'clock we start 10 o'clock in the morning. We start with Carrie Trout, General Manager, Shipping and Maritime Americas for Shell, Lois Zabraki, who's the CEO of International Seaways, David Clamage, who's the Managing Director at Salisbury Hill Financial and a consultant to Generate Capital, and Dr. Arlie Sterling, a CEO of Marsoft, followed by a panel of financial experts who will continue the dialogue which these gentlemen have the responsibility for implementing, and that is, how do we fund the transition to a decarbonized world? Jim and panelists, once again, thank you very much for your participation, thought, care, and support of this event. So long, everybody, until tomorrow.
Thank you.
Thank you.
Thank you.